Welcome back and joined by Rakesh Verma, co-founder and chairman and managing director at MapMyIndia this morning. Rakesh, great having you. Let me start off by understanding you're going to be on a materially higher growth clip over the next couple of years, right? All the way through FY28, so FY27, FY28. Talk to us about what changes for you versus FY26. That's the first piece. The second piece, what's going to contribute to that higher clip in terms of growth? Your order book is healthy, but what's going to contribute to that growth? What are you going to execute?
Thank you for inviting me here. Well, as far as the FY26 that ended, everybody could see that the Q4 was a big turnaround compared to Q2, Q3, and there was a significant growth. Now, that's part one, but let me share what is so special about MapMyIndia. MapMyIndia has the data which everybody calls it as a gold mine, but we have technology on top of that which converts the gold mine and extracts the data into several use cases, and those use cases are continuously growing day after day, months and years. Now, with that kind of a background, MapMyIndia is well positioned to keep moving up, and we are very confident about the growth. In the past 5 years, we did grow at a 24% CAGR rate, although FY26 was a little muted. The future years, we expect again that the growth trajectory will happen, and happen how much that time will tell. But with the kind of work we are doing and the kind of products and platforms we are creating, we are very bullish about it.
Government deferrals, is that getting reversed? Because that was one of the reasons why FY26 was a drag for you. What are you seeing on that side of things, consumer and enterprise?
Well, the way we look at it, if we think about today, in a 5-year cycle, there comes a time also of consolidation. And as we all know, the last year was full of AI talks. Now, in the short run, the kind of orders we already have with over 1,800 crores of orders in hand, conversion of that is a short-term goal where we can do it. With heavy AI induction into building the products and the future products and technology, that will accelerate our conversion rate in the times to come. And the third part is also creating something which is beyond 3 and 5 years. So yes, last year was a muted one, but then that was in the 5 years, one of those years.
FY28, my understanding, Mr. Verma, is you do 1,000 crore of revenue. Achievable in your opinion? And how easily or how tough is it going to be to achieve that?
No, it's not easy, because if we had not missed FY26, that was very much achievable. But so I will say that maybe it might be one more year to achieve that target.
With regard to the acceleration that you'll see, what's the kind of CAGR you see? Around 20 to 30%? Is that the kind of range? And if so, if you can put a number to it?
CAGR, what we are talking about is it should be in double digits, not in a single digit. Whether it's 20 in a year or 15 in a year or 30 in a year, it will be a function of, not a function. We are working very hard to see that we have the list of potential customers who are just sitting on the fringe. And if we are successful in converting them, a couple of examples you can see how Amazon now is fully utilizing Mapple's platform in the quick commerce space.
A couple of nuances with regard to data. Receivables have jumped for you, especially on the government side is my understanding. Correct me if I'm wrong. Does that unwind in FY27, and if so, by how much?
Well, if I understood your question right, government is one of the verticals. I will not say that's the vertical we count or we make our strategies on. If government is spending, we want to leverage on that. If government is not spending, we can still deal with it.
And with regard to contracts and negotiations, with the fast-moving pace at which technology is changing, are contracts, especially the new ones, on the fixed price side, getting rewired at all? And on the variable side, if at all there are contracts, please convey that to us as well. Any changes with regard to the pattern of the way in which you're winning these contracts?
Interesting. None of our contracts have been rewired. Fortunately, it is because we are able to add more and more value. So the customers look at us that, okay, if they have agreed for a 5-year, 7-year contract, and in that period, we are able to give them more and more. Why would they like to renegotiate the contract on the downward side, which becomes a normal concern of anyone?
And is delivery time shrinking for you, given AI, especially on the auto side? We're hearing that delivery times have shrunk quite substantially. We're speaking with another management of an ER&D company, and they were saying it's the lead times are shrinking by half.
Well, on the development side, yes, it is shrinking. Today only I read Tata Sons chairman's talk about that one software person with one agent like things. Yeah, that will shrink that part, and that will definitely improve the productivity, ultimately leading to a faster delivery.
And therefore, how are you seeing the turnaround times in with regard to delivery of your products to the industry? Do you expect an acceleration there in terms of implementation, which should aid growth for you?
Absolutely. And that's exactly what I said, that AI is helping us.
How disruptive is it for your business, sir? AI, can it probably disrupt you in say a significant fashion, or how are you building moats around it? How are you capitalizing on the opportunity?
It's to our advantage. That's the interesting part. It's not to our disadvantage. We have not reduced the number of people, but if I didn't have to do that, if I use AI, then obviously the productivity goes up, which means it can harness more and more business for us. That's our strategy, and it's working well.
Thank you so much, sir, for coming in and speaking to us. Absolute pleasure having you here on ET Now today.
Thank you.
All right, 17 years to ET Now as well. And ET Now has empowered investors, decision makers, with insights needed to navigate India's growth story. Continuing that commitment, we bring you the ET Now Market Summit 2026, a gathering of India's leading economists, fund managers, policymakers, and investment experts, including the likes of Sunil Singhania, Sandeep Tandon, Sandeep Sikka, Ridham Desai, and Vijay Kedia. They'll be coming together to decode the future of Indian markets, a special event where SEBI Chairman Tuhin Kanta Pandey will be the chief guest and share his insights on navigating volatility. Stay tuned to ET Now on the 12th of June, which is on Friday, for exclusive insights and powerful conversations from the ET Now Market Summit 2026. And we are timed out on this edition of First Trades. From Sajid, myself, everyone who puts this show together, thanks so much for watching. Hope you had an engaging last couple of hours. We'll obviously keep you in loop, in sync with regard to some of the corporate conversations we're going to have over the next half hour or so. You want to stay tuned for that here on ET Now.